Alrighty, let's let's just kick this off. I'm gonna talk about the market. I'm gonna talk about what we're seeing here out here, the headlines that we had kind of going into this next week of trading, because it's gonna be pretty interesting what we get this week. It is gonna be a shortened week of trading. The markets are gonna be closed on Thursday. It's a half day, I believe, on Friday. I believe the equities close at 1. So that probably means it's going to be maybe an interesting first 2, maybe 3 days of trading. But you guys got to realize traders are lazy, and and they're likely going to be taking 3-4 day weekends, hell, maybe even 5 day weekends, because that's what they love to do. So we'll have to see. We'll have to see how this goes. We'll have to see what we get this week, what the volume looks like, and yeah, it's going to be interesting. We do have some economics and stuff coming out this week. I'll talk about that in a moment. But yeah, going into the end of the week, we had the options expiration. So 41% of SPX Gamma expired on Friday. And we talked about this on the podcast and in the mornings and stuff, that there was more calls and puts at the 4,700 strike in the SPY than I believe Spot Gamma and a couple of guys like that had ever seen concentrated in one strike price, which is why if you looked at the SPY pretty much all week, we really just kind of seemed pinned in here for the last whole week. We really weren't going anywhere. We touched up to 470. Chilled, touched up to 470, chilled right at 470. So we really didn't go anywhere. And that could largely be because of that. It could also largely be just because we needed some time in here. No one was willing to buy through any of these levels or sell through these levels. So it's a nice little flag we have going on. And despite a lot of the things that I may say coming up here, this is still bullish price action. I can't be. I'm not going to sit here and say, oh yeah, this is it. This is definitely looking like a top. This is no. We're still chilling here. Now that all of that gamma has expired, we could get some funky trading this week. I will be very curious to see what happens here. So just keep that 4,700, that 470 in mind, because if we go blowing past that, anyone who still has those positions, has any of that size, that some of that could come into play with some of the funky moves out there. There was some decent equity options expiration out there over on Friday. Not that much compared to some other of the options expirations this week, but you could see some things in stocks. It's unlikely though. Some stuff to know out there. Obviously, we had the Rittenhouse verdict. Not that many riots out there that I've seen, at least in the headlines on some of the stock focused headlines that I'm looking at. We did see some of the stocks move on Friday. Nothing much though. I mean, Smith & Wesson did July. They hardly did anything. That's because we're not really seeing that much, and I think everyone was expecting that. So when everyone expects something to happen in the market, rarely does. So that's that. And then also you had the Build Back Better bill. We're going to have to keep an eye on that. The Build Back Better bill was passed in the House, trying to push it through the Senate. There's a lot in there, obviously a lot more spending. People obviously are going to be worried about the impact on inflation on that. And yeah, obviously that's something that we're going to need to be monitoring. But what I'm more focused on is I want to do a little digging into that as we get closer to passing that. If it can get passed, I'm sure it's going to have a couple things slashed out, a couple things added to it as they really try to wiggle this through the little bit of leeway that they have in voting. So it's going to be interesting to watch. But if they do pass it, there are things in there. I mean, politics aside, we really try to avoid politics and social commentary when we talk about the market, because the only thing it does is cloud judgment. The market doesn't care if Republicans or Democrats are in control. They really doesn't. Frankly, people like to say, "Oh, Democrats in control, market's going to go down." Let's be honest; they're all the same for the most part. For the most part, it really depends, I guess, to an extent, on who's in control and stuff. But the market. The market goes up, and the market is not focused on one specific person in politics for the most part, again. So we'll have to see what this passes through, but there are things in there that could alter some stocks, could alter some sectors. There's some healthcare stuff in there. I know right now they're debating about the insulin cap, the price of insulin cap on there. I don't know anyone who thinks that insulin should just be able to be hiked up in price, but again, it's politics aside, the stocks that could be affected by that could see some moves. So we're going to have to just pay attention to that as they add things and change things in that bill. If it passes through, it could have some impact on stocks, sectors, whatever. So that's that. Going forward, let's just talk about the market structure before we even talk about levels, because we say this time and time again. This is a greedy market. This is a lunatic market to an extent. Some of the things you're seeing out there, the aggressiveness in dip buying, and so when we're telling people like you're buying airlines, you're buying cruise lines, you're just asking to have your money stagnate, and that's just because right now, I'm talking right now. This is not for trading forever. Market structure does change, and this market structure will change. Right now, if you're dip buying weak stocks, all you're going to get most likely is weakness. I mean, you look at the airlines. You dip buy this stock, you had a moment of happiness in February. Congrats. Other than that, it's been pain. Same with the cruise lines. You get like maybe a week of happiness, pain. I don't even need to just stay to the reopening plays. I could pull up some of the stocks that have been weak lately. Snapchat, sideways. You got a gap on earnings. Congrats, sideways. Now we're down again. Pinterest, down for the year. DraftKings, if you're trying to dip by DraftKings, God help you. If you're trying to dip by any of those stocks, payment processors, you did have some happiness in summer, so I give you that there may have been some dip buy opportunity in here originally. But imagine that the weak stocks continue to get weak headlines, while the strong stocks continue to get strong headlines. And so they're dip buying despite how overvalued these companies might be. You've got Unity continuing. Asana has gone from 20 to 140 this year. I mean, it's Asana, for Christ's sake. No one thinks that Asana should continue to be up here likely. NVDA, Tesla, even they just dip bought Tesla off 1,000 despite this lunatic run that we just had, and that's just because this is the market structure we're in right now. People are greedy. They're squeezing things out. They're inflicting pain on people who are trying to mean reversion trade strong stocks right now. And at some point this will change. At some point this structure will hopefully shift away. But if you are dip buying weak stocks, just realize you're gonna have to be very patient. I mean, you're gonna have to be patient in PayPal. You're gonna have to be patient even in Square. People are saying Square, but if you look at Square, we're almost red for the year. It hasn't really gone anywhere. It's a good company. People love it, but yeah, semiconductors, AMD, it's lunacy for some people, but this is the market. So that is the kind of crazy market we're seeing. In fact, Goldman actually came out, I think it might have been the CEO, came out and said that the market greed is outpacing market fear right now. And so that typically, the greedier and greedier the market gets, the more likely you're going to have that snapback and that crash down. Whether that's going to happen now, this week, who knows? After this week, we're going to be starting to push into December, and then you're going to have more things coming into play. It's going to be the debt ceiling all over again. Evergrande, I'm sure, will raise its head again. As we get deeper into winter, energy crisis might pick back up a little bit. We'll see how some of that develops. Obviously, the Powell renomination, still quiet on that. We're still waiting to hear. Likely odds are still giving Powell the edge, but if Brainerd comes in, market could panic a little bit because she's a little more progressive, but she's still pretty dovish. So I don't think the market is going to implode necessarily if Brainerd's nominated, but uncertainty in any form is not something the market likes. So we'll have to see. So looking at the market and the SPY and the Qs and the IWM, what are we watching? And there was one more thing I wanted to mention. That is, we talked about it on Friday. The Hindenburg Index triggered again for, I think, the 14th time this year. So I tried to pull up a chart, and I actually couldn't find it in the little bit of time I spent looking. I wanted to see how many times this thing triggers every year, because look, this thing triggers, the market just doesn't go down. But we did see it get up to 13 triggers on 2008 dot-com bubble. People love to try to spit this out. This Hindenburg Index, it repops up in the media every now and then, and it doesn't always. It's not just like it triggered, we're going down. But it has triggered a lot. People think that correlates to an impending market crash. We are seeing some indicators poke up a little bit. If I pull up some of these internals. You have the put-call ratio for the SPX is actually starting to peak up. I think last I saw on the 19th, it got up to 2.18. That's the largest it's been since, I think, September. Looks like September 27th, I believe. So you're seeing the put-call ratio pick up a little bit. In the SPX, you're seeing it, just kind of perk up just a smidge. It's not, overblown. The AAI sentiment, which is American Association of Individual Investors, I don't know how great this thing is, but we are seeing bullish sentiment there, and bearish sentiment kind of start to shift a little bit. Bearish sentiment is the largest it's been since October 27th, bullish sentiment is the lowest it's been since that day as well in terms of what people are starting to think. So people are a little skittish. And that doesn't mean the market's again going to implode, but they are less likely to be buying the highs. They're less likely to be buying up here in the market at least. So, and let's be honest, this market has been going up on the shoulders of a few again. If I pull up the percentage of stocks trading above the 50-day SMA, we've been imploding over the last week. The market hasn't gone anywhere, but this indicator has dropped now from 75% to 61%. If I go to the 100-day moving average percentage of SPX stocks above 100-day, same kind of deal. I could do that for any kind of moving average, and you're seeing it roll back over, and it's not been near highs like the rest of the market. And this also happens whenever small caps are weaker, because that's kind of the broader market in general you could consider. If the IWM is going to be strong, those indicators are likely going to be strong as well. And so the IWM has been actually making new lows while the SPY and the Qs have been sitting up. This is nothing new. If anyone's been even watching the market over the last year, this is just kind of, we're just kind of back in this mode at the moment. I don't think it lasts as long, but again, you can't instill your own biases and desires and thesis on the market. You have to create a thesis and then wait for price action to confirm that thesis. So what I'll be watching in terms of levels this week, and again, we don't know where the futures are going to open up. It's been a relatively quiet weekend, I would argue, so I don't think we see too much to move us going in. I'm going to watch kind of where we keep dip buying, which is around this 467 in the SPY. We keep seeming to kind of dip buy off of here. It seems to be a relatively decent inflection point in the SPY. If you want the market to go down, we got to start breaking those. That's around the weekly lows as well. So if we start rolling through there, maybe we get some opportunity. If we pop through Friday's highs, which is also pretty much our all-time highs, then we're still going up, and there's no reason to be shorting. Qs, same kind of deal. In fact, Qs are actually a little stronger because we had breakouts in Amazon, breakouts in Apple. The big boys, Apple took off. They did have headlines. Tesla, they dip bought. Amazon took off. So the big boys are inflating the Qs, and Mike even talked about this. I don't remember the numbers, but it was like Wednesday, like 14 or like 20 of the stocks in the Qs were green, and that was it. But we were still going up. That's, again, just where we are in the market right now. So Qs, a little stronger, seeing that shift up right now, seeing us kind of break almost a little bit of it. It's almost a cup and handle, I suppose. But, we're sitting up here. You've got levels to work off of. 400 is going to be kind of a decent little support here, most likely for the Qs. IWM, don't know what to tell you, looking like crap in a downtrend right now. So if you want to buy value, it at least needs to break, some of these descending highs we're seeing. You want us to see at least a higher high and a higher low before we even think about really wanting to step in here. Now we are at, a little bit of a level here, an original kind of all-time high here in the IWM near a breakout point. But you got to be careful because when the IWM rolls over, it could keep going. So we'll see if people maybe shift into value going into Black Friday and Cyber Monday. You never know. Maybe we see people kind of think that we're going to have a good retail week or two. I argue we probably won't. You never know. We have had good retail sales the last 2 months, good prints. Retail actually has been killing earnings for the most part, so it's likely. But I have a theory that a lot of this isn't inflation adjusted, which we know retail sales numbers aren't. They are not inflation adjusted, and inflation is obviously astronomical in some areas. And also, I think, like me, a lot of people have been ordering their Christmas presents early because they're like, who the hell knows when the hell stuff is going to come right now in these days with the supply chain and stuff. So I think, we could see some, maybe continued selling. But I've already ordered a lot of my Christmas presents. I'm usually a very large laggard on stuff like that. So I don't speak for the rest of the American people though, because we are pretty lazy. So we'll see. We'll see how the procrastinators are out there. But maybe we see people rotate in here this week. Maybe they use these 3 days of trading we essentially have to do some rotation. Had a lot of options expiration. But until we start making some new highs on this IWM, it's just not interesting right now. For the short term. So that's where we are. And I do remember yesterday, I think I saw in a comment that someone asked, what is the Hindenburg Index? So I'll just give you a brief synopsis just so people know. 4 criteria must be met to signal a Hindenburg omen. Daily number of new 52-week highs and new 52-week lows in the stock market have to be greater than a threshold amount. It's typically, I believe, around 2%. The 52-week highs cannot be more than 2 times the 52-week lows. But while all this is happening, the stock market has to still be in an uptrend, which we are. They use something like I think like a 50-day rate of change indicator or like a moving average or something to help indicate that. And then there's something to do with the McClellan oscillator, measuring a shift in market sentiment to more bearish side. So there's a number of things that while we're in this uptrend, a lot of things need to be happening with the stock, and it typically triggers multiple times in a year. But it does trigger often, but it has triggered several times in a lot of these downturns. So we'll see how the market is, but I just wanted to inform people of that. Obviously, if you look at fundamentals of the market, Buffett indicator out of control, continues to climb. We're at 220%, well past where we were in the dot-com bubble, things like that. Now, some people argue, well, maybe instead of the things like the Buffett indicator, where it's market cap compared to GDP, rather than market cap coming down, maybe GDP will just catch up. Well, we will find out on Wednesday because we actually get GDP numbers, but it's unlikely. It's not the trend that we're seeing right now. We're seeing some good numbers out there, but we're also seeing some shaky things out there. But anyway, going back to the market, we'll see what we get. We've been consolidating up here, did a little flag. If we do pull back, I would love to see the market pull back, frankly. We're a little far away from the 50-day SMA and from some of these other moving averages. RSI actually, I think, made a new low technically maybe down here. So we are seeing a little bit of divergence there, you could argue. Didn't make a new high on Friday like we did on Friday. So a little bit of divergence on the RSI indicators. Not something I'm going to be like, oh yeah, that's it. That's great. But it is something to keep in mind, that we aren't seeing the speed. We'll see what volume even looks like this week. On a low volume day, market tends to go up, but we will see. So that's kind of your situation. You've got plenty of levels you can look at over the last week, month, whatever. I would love a pullback, but until price action confirms, I'm not going to get too antsy. Some of the headlines that we can get this week. Obviously, we can keep an ear out for any of the bill stuff or the Powell nomination. We only have 3 days before. I don't even know when Congress goes on break. Knowing them, they probably already are. So I'm not really gonna think that anything's gonna happen with that this week on a holiday week. Monday is going to be relatively quiet. You have a 5-year auction. Who cares? Existing home sales. Who cares? Tuesday, you'll have the PMI composite flash. That's really it. And then Wednesday is where they just jam-packed every piece of economic information they were going to release this week anyway. You'll have durable goods. You have GDP, international trade in goods, jobless claims, retail inventories, new home sales, personal income and outlays, consumer sentiment, petroleum numbers, nat gas numbers, and the FOMC minutes. So decent amount of stuff. None of that is usually something, maybe GDP or a couple of those things that would just move the market on its own. But if we get a whole bunch of crazy shit from all those numbers, who knows? You never know. FOMC minutes could be interesting to see if there's any more information on some of the taper stuff in there, or not taper rates, but it's unlikely. So, because it is from the past meeting. So that is what we have going in. Taking a look at all of our favorite commodities out there. Oil continuing to pull back, which is pretty interesting. We're just gonna have to keep an eye out on this to see. You've got oil and nat gas have seen a little bit of a pullback, a shift. I don't know how long this lasts. It really depends on the headlines. It's a very headline-prone thing right now going into. We are entering kind of a cold snap. I think the Midwest is supposed to be experiencing some seriously cold weather here. I know Europe, I believe, hit a streak of cold. So we'll see if that affects any of this. I know a lot of the inventory numbers are getting pretty low on some of the U.S. special reserves at least. So we're gonna have to see what happens here. We haven't gotten any definitive action, I believe, that could really help this issue going into the winter from Biden or anyone else. But right now, momentum's to the downside. We'll see. It could help companies, obviously, if oil comes down, but I'm not going to hold my breath on that continuing for long. Crypto, we did see a little bit of a pullback. I think that was largely, in my opinion, due to some of the infrastructure stuff. There's that bill in there. You had people coming out saying, oh, this gives us a whole bunch of now new insight into crypto. And, the SEC head of criminal investigations came out last week and said, oh, yeah, we're going to be seizing probably billions of dollars worth of crypto next year because of this new tax insight law and people who are not reporting their crypto trading and so on. So that could spook some investors. 95, I think, percent of volume in crypto is the long-term, buy it for lifers, most likely, long-term investors. I don't think that this spooks them, but it's something to keep in mind. that it could be out there. Ethereum holding up better. I'm always going to be more bullish Ethereum personally. I think Ethereum has a much more potential out there. The NFT thing, while most people think it's a scam and it's a fad, it has more staying power and potential if the whole metaverse thing works out in 10 years or however. The more digitalized we go and the more that you have there, the more potential there is there. We'll see. I just know a lot of fund managers like Ethereum better anyway. Long term, it's just got more to it apparently, but we'll see. Right now, momentum still kind of pulling back down to the downside. We did bounce off the 50-day there on Bitcoin, but I'd like to see it get back above 60,000 before, or at least base in here before I'm saying we're going back up. We did see the dollar have a nice little strong week there. We are still sitting strong. I think a lot of that has to do with a couple of things. First of all, you got some good numbers in there, some decent numbers as we've gone over the last week or two. You also have the euro, the lira obviously is in the complete garbage can. It's like toilet paper. A lot of the yen and the yuan, a lot of the other currencies are weakening at the moment. The euro got a little bit of a pop. On Germany not locking down and a couple things like that, but right now dollar is kind of shifting into a little bit of strength. We'll see how long that can last. It is kind of competing against inflation right now, but the tapering is technically bullish for the dollar, as is rate hikes. So it's got some headwinds and some tailwinds. Right now the tailwinds are winning out. Gold, I'm still bullish gold. You are seeing a pullback. It's funny, the creator of Ethereum actually came out and said he still loves gold personally because he thinks it does things that Ethereum can't. I'm like, okay, I mean, that's fine. But until the market, is going to buy this thing long term, right now we are breaking through those weekly lows, so you got to be careful on it. But I'm still mostly bullish gold. But this price action in the short term says it looks like we're probably pulling back, but we'll see what happens there. It also is supposed to be, for the most part, trading independently or kind of opposite of the dollar usually, but they've kind of been moving together a little bit more lately, so this could just be a little bit more of going back to that relationship of the dollars breaking out and so gold's dropping. With that being said, one last thing we'll have to be watching is going to be rates. Rates had a nice little drop on Friday, but this is typically where we're bouncing from. We keep kind of bouncing. We're in a little bit of a volume node right now with rates. This is also kind of our volume node from the summer. You've had some serious spikes over the last 2 weeks, and a lot of that came with more aggressive percentage of likelihood of rate hikes coming in the coming months or so. You've gotten some bullish talks from several of the Fed governors hawkish talks rather, of the Fed governors in terms of raising rates. That caused some spikes in the rates, but we'll have to see if it can stabilize in here. I don't think we get much in it this week. But you never know. You never know with this market. Someone could say something, bull could come out, Powell could come out. Who knows? I don't think we get anything though. The rate hike timetable seems to be fairly common and set next summer. So we will have to keep an eye on that. That all being said, I believe that really covers everything. Volatility, obviously, still just sitting down here, has been a little stronger despite the marking up, holding up at highs. We've seen a little bit of a divergence in trading there. We'll have to monitor that as well. It's just another indicator to be keeping an eye on. But with all that being said, let's talk about some of the stocks that I'm personally watching going into the week. I'll not take too long on this, try to move through. I'm going to talk about first some of the day trading stuff from Friday that I think could have some second day play potential. Some of the fast movers from last week that could move. Then I'll talk about some of the strong stocks that could still be stronger, and we'll talk about some of the upcoming earnings and what that could mean. So some of the day trading stocks that I'll be watching. First of all, GTECH. This is a stock that popped up on Friday and did a nice little flag in here. If I go to the intraday, just go to a 5-minute. Yeah, you can see nice little range from 8 to 11. Never really broke. Got above the 200-day technically on the daily. Now, last time it popped, it does not tend to really hold those, so we'll watch it to see. I'm trying to stop saying we'll see because I realize it's being a verbal crutch today for some reason. But this is a EV company. They launched their second electric industrial vehicle line, so it got a little pop there. EV's been relatively hot and relatively in play. I don't like the amount of volume it did. I tend to say that when something does a ton of volume and doesn't really go anywhere, that usually means it's going to be tough for it to get any further. That probably means that there were a lot of bag holders in here from over here that probably were just layered in here and trying to get out. So it's likely going to be a fade, but that's fine because if it opens at $8, $9, gap fills 4, that's fine. That's almost 50% if you were going for the full gap fill. So I might watch this on the range, see if we get a break either way. get a nice little gap fill potential. Some other ones, AUR. This was a good one, and I'm glad that I watched this one on Friday because I missed the VOSO the day before, so I said I was not going to miss another SPAC explosion, and I did not. This one was has to do with autonomous driving. Saw some good volume in here, nice end of day volume. And now I'm actually a little worried on this one. We're going to have to see where it opens on Monday, but when you see something close like this with good, strong volume, a lot of times I used to love gapping those up. This is a move down. We puked right out in the after hours. So you might get those bag holders from the close that might flush out on Friday. It all depends on where we open up. If we open up even lower, you never know. So this could be a play in either direction, but you had really clean flag breaks on this one pretty much all day, especially in the morning. You had a nice little range and that broke out at the end of the day. So it was relatively strong on Friday. I want to see if we get that continued strength. Roblox, I got to mention it because it's been a beast for about 2 weeks straight now. Friday was a little choppy in terms of trading action. We are sitting up here at the highs. You almost double topped at 138. So if you want this thing to go up, it's kind of your current double top. We've made higher lows for who knows how many days straight now. So if we do start to roll through that 130, you could get some serious pullback. There could be some serious profit give back potential. RSA got a little hot, 77, but that's not even that hot, honestly, if you think about a stock like this. We'll see where it opens by Friday. Volume's held in relatively steady, but this is one that I'll probably keep on the old check every day list just to see if we get anything good. Jewel spent a lot of, Wednesday and Thursday really doing some fast movement. Friday, volume just kind of started to drop, and we kind of just flagged in here. Oh, that is the there we go. So we flagged in here. If you want the pullback, 13 is your line in the sand. Otherwise, as we're flagging here, if it gets back through 15, you never know. It could get going again. Where did the daily go? There. Nope. Man. There we are. Thank you. Thinkorswim. Thank you. Jewel. So, I'll watch that one. IONQ is kind of the same thing. Apparently, I heard that this is a pump and dump and that, people, it's got nothing, but the CEO's been pumping it and volume has been all over the place, as has RSI. So at this point, I'm just watching momentum. And we kind of flagged in here a little bit over the last 2 days, which is, I think, maybe this thing could curl back up. I was trading higher in the after hours before that shut down. So we'll see where it is by Monday. But I mean, every time I look away from this thing, it explodes. So I'm not going to do it. I'm not going to not look at this, or I'll at least set alerts if this thing wakes back up. We're in a greedy market, so you never know. I've seen crazier shit move further. Lucid woke back up on Friday, had a nice 2 days of rest, and then exploded on Friday and kept that momentum in the after hours. So definitely going to be watching this one. Volume was nice and steady as well. Actually upticked a little bit on Friday compared to the 2 days prior. So I think that if this thing gets through Friday's highs, you could see this will be short-term momentum trading. I'm not investing in Lucid up here, but I'll definitely keep an eye on it to see if the volume sticks around and if momo traders continue to take this. Kind of took over after Rivian dropped off. That had its fun. Tesla's kind of woken back up. So we'll see if Tesla and Lucid are in play or not. Those are kind of your two strongest, I would argue, EV plays, along with Plug. Plug's pretty strong, and I actually like this one on the daily, maybe even for a longer term trade based on how it's holding. But I like the action I'm seeing in those three. Those three seem to be the strongest. XPEV chilling in the range. I showed you Rivian. So XPEV does report earnings, by the way, Tuesday morning. So maybe that wakes it up. Maybe that moves the whole sector. Who knows? Dollar Tree I'll mention only as a day trade because if you're investing in it up here, God bless you. This thing obviously has had a nice little move. You've had headlines in here several times now. They had a nice activist investor, I believe, on this day. I believe that's what caused that spike up on the 15th. I want to see if I can find the exact amount that they had in there. They also had some price target increases. They've had several upgrades and price target increases along the way in here as well. So all that stuff is always going to be a little bit of a hype for them. But activist investor, $1.8 billion stake. So there you go. People tend to like activist investors for a number of reasons. The activist investor will get in here and they'll try to make changes because they want fast returns on their money. It depends on who the investor is, obviously. If Warren Buffett gets in, obviously a lot of people are going to be hyped about that because he's a longer term player, but he makes drastic and important changes in companies. A lot of people love, they're activist investors that love to get in there and cut the fat out of stocks or fire people or trim costs or spin things off. So a lot of times that pressure comes from activist investors and people who come in with big stakes and have a lot of noise and are very pushy. So that gave it a little bit of pop. That follow through continued. I'm not going to be buying and swinging up here or shorting and swinging because it continues to look rather bullish up here. Had a nice little flag in here, so I think you could play this in either direction. We'll see who wins out on Friday or on Monday rather. I'll still be watching the semiconductor sector. Yes, it's still in play. NVIDIA broke out, and this is just a great example. We saw a lot of people who wanted to short this thing after earnings, and I hope you guys covered because this has never been. Even the earnings day where we finished red, we bounced off of. If I zoom out to an hourly, we bounced off of this level here, this kind of resistance level that now turns support. That was still technically bullish action. So until they stop, this is just dip buying a strong stock. And when this thing drops, people will still dip buy. So it may look overvalued, it may be overcooked on levels. RSI may be diverging for some people, but we're still pushing higher. After hours look strong as well. So it's short-term trades if I do trade this for me only, and even then I'd likely throw options or something because I don't want to buy a $300 company. It depends on how much size I can get, what's going on elsewhere. But otherwise, you can watch AMD. AMD's been almost as strong. I've been liking Micron lately. I think I've been talking about this for like 2 weeks now. I loved the action on Friday. No idea where it came from, but I'll take it. It's been fantastic. That a pop like that tend to take some strength off, takes a little bit of profits out into strength if you're a longer term trader. And I was looking for some longer term play on this. There's a little bit of a move, especially for Micron. It doesn't do something like that usually. It's not. This isn't Micron's personality for the most part. And if I zoom out, past the week time, this is the strongest we've seen it. And even then, it was a nice steady grind up. You had one little gap in here, but that's a lot for Micron in my opinion. So we'll see if we get continuation on that in this market. The dip buyers and the aggressive FOMOers and greedy people out there may see that and may start salivating, thinking that they can turn this into the next NVIDIA. So there is potential in here for this to continue exponentially, but I'm going to watch it after a move like that. We'll see how it reacts to that 85 and then maybe the 200-day. But this has been a good one in play as well. You could also watch Qualcomm because Qualcomm's been a beast after earnings as well. They've had good headlines flagging around up here. Needless to say, you can pretty much watch any kind of well, maybe not any semiconductor out there like Intel. Sorry, Intel, but that's not a stock I want to touch with a 10-foot pole. And doesn't look like the market does either. AMAT, they did dip by off earnings, but they couldn't quite hold it up there. TSM's been kind of stuck, although it is kind of breaking out a little bit, I suppose. This one actually might wake back up. They're the largest semiconductor maker out there by far. I mean, they are bigger than I think almost all of them, minus NVIDIA, like combined. So it's insane. But the semiconductor has been one of the stronger markets sectors right now, and a lot of them, like AMD and NVIDIA, have been helping the Qs stay so damn strong. So it's a sector to at least watch, even if you're not trading. It's a sector to watch because it's going to help prop up the market. Other stocks that I'm going to be watching that aren't the semiconductors, and let's go into some value play, quote unquote, that look interesting. I kind of like Hilton here. This is a pretty interesting little resistance here at 145. I want to see if this one can break out. It's been relatively strong in a decent active sequence. Had a little bit of a pullback over the last month or so, but I want to see if this is going to be a breakout. Otherwise, this is looking like a head and shoulders if we can't break out. In terms of one of the other reasons I like that is, we're seeing some decent inflation out there in hotels, motels. So some of the sectors that have been hit the hardest from the current level of inflation. Hotels, motels have had about, I think, 26% inflation on their CPI subcategory over the last 12 months. So they're definitely one of the harder hit sectors, and could lead to higher prices if they translate that over to the consumer. We'll see, but I like that technical level. I like a clean technical level. This 140 seems to be pretty decent support. I also like that we did this dip on Friday because I feel like that flushed a lot of people out. Now they're probably going to pop them, but we'll have to see if the price action confirms that. McDonald's flagging up here pretty nicely. The issue with McDonald's is I've been bullish in McDonald's in here, and it just takes so damn long to move. So maybe I do know that on the latest hedge fund 13F filings, you did have some big boys who took some positions in McDonald's and over the last quarter and liked it, but it's just a little bit of a slow mover for me. We'll see. From top to bottom this year, it's up like 25%, which is good normally, but not in this market right now. So we'll see. SI woke up again on Friday out of nowhere. I love it. This was a stock that I've talked about since sub 100. They have a stable coin. They're partnered largely with Facebook stable coin rather. They're big into crypto. Despite the crypto weakness, they kind of popped out there. I know JP Morgan and a lot of the guys love this company. They have price targets at like 300 on these guys. Not that is a sole reason to buy. They initiated on them with that, but I like this stock. It looked relatively strong, finished strong on Friday, so we'll see. And if I do play this, I'm not going to long-term initiate up here, but I might take some multi-day swings or something if the price action looks good. Retail has obviously been good. Talking stocks like Ulta, Nike, Best Buy. Home Depot and Lowe's just had good earnings, and they're continuing their ascent. So there's a lot of good potential retail stocks out there. I kind of like this Ulta. This was a stock that I was watching in here. Started to look good. Then they had a bad headline that sent them down. But look, they bought the stock right off this 360. We're back up at the highs here. We're above psychological $400 level. So that's going to be a nice little tight stop I can put on that. I'm going to watch Ulta to break out. A little pricey. Estee Lauder as well. A stock that kind of moved along with it, sitting up here pretty nicely above that 350. Again, another pricier one. You can also watch some stocks like Nike. Nike kind of waking back up here, getting back above some levels. So these would be shorter term plays for me. We have a lot of we're kind of in that section of earnings season in terms of retail. So the retail stocks that are reporting earnings that I know of this week: Urban Outfitters reports Monday after the close. Also Tuesday you have Abercrombie and Fitch, American Eagle, which I'm very bullish on after earnings hopefully. Best Buy, which has been a beast. Burlington Coat Factory, Cracker Barrel, I suppose that's more food. Love Cracker Barrel. Dick's Sporting Goods. Dollar Tree also reports Tuesday. Forgot to mention that. Smuckers, which is I guess more food based. Jack in the Box, which is another food one. Gap reports Tuesday after the close. Guess reports Tuesday after the close. Nordstrom reports Tuesday after the close. So you have a lot of retail reporting kind of the few days that were open. So just be careful with that sector. It could move them, but there are some good retail sectors out there. Just be careful buying any of these in front of earnings, because if you're like Foot Locker and you're one of the few retail companies that misses, you drop 12% and you're going to lose a lot if the market punishes them. So just keep that in mind. If you do try to gamble in front of earnings, it's no reason not to gamble. It's fun sometimes, but just know that you could lose whatever you put in there. Other stocks that I'm watching: Facebook. I've talked about this a couple times now. I know David said he bought some as well. Nice. Hopefully that this continues to work out. I liked that we broke out on Friday. I was mainly looking at this on Friday because the price action was showing stronger than the market. We were actually trending higher in the pre-market, while the market was largely looking soft on Friday, and we were kind of descending a little bit, which was almost telling me that let's squeeze out whoever might have been shorting this. So it technically held the 50-day. I don't like that the 50 days trending down. This is a shorter term play. I'm not looking to take Facebook to 400 or anything. I'm just looking to take this into, we've got 7 trading days left on this ticker. So, I'm hoping that we get some hype into the metaverse ticker change. It's kind of a weird thesis, but the metaverse play in general is a very long-term play. It's like a 10-year play. That's what they're striving for on that. But I want to see if people buy into this before the ticker changes. I like that it's kind of curling up as well. It was a strong stock, so I'm trying to dip buy a strong stock here to an extent, but it could do something like the payment card process where they were strong and then they just weren't anymore. But I'm going to watch this. This is going to be kind of a make or break, hopefully, week for Facebook. Going to keep a tight leash on it, though, because I don't like it. It couldn't hold the highs on Friday. So we'll see on that one. I already mentioned Plug. I do like Plug. Apple was great. My issue is that Apple went faster than I expected it to. We talked about these descending highs. In fact, I think it was Michael or someone who called out the descending highs here on Apple. Sometimes trading is just that easy. Sometimes, you just see the descending highs and the stock breaks out, and it's a stock like Apple, and off it goes. And sometimes you get a headline in there that can speed that thing up. They had their EV headline that they think the EV stuff, or the autonomous driving rather, is going to be coming sooner than possibly expected. Still a couple years out. Morgan Stanley and a couple other people hella bullish on these guys when it comes to the car. They think the car stuff could actually double their revenue, which is crazy for a company like Apple. But you saw a nice explosion there. There's a stock that was the market general, went out of play, so now you've got the dip buyers coming in here. This could easily continue. It's Apple. Especially you look, in here, it can really get into a move. Kind of a fast 3 days. We'll see if we get anything there, but I will watch it, as well as Tesla. These are the stocks to watch. If you want this market to go down, you need to be having a chart that kind of cycles through Tesla, Apple, Amazon, Microsoft, the big boys, and NVIDIA, the big boys that have been propping this market up. I'm definitely watching Tesla and Apple for short-term trading, but also as a market sentiment indicator. I'll be watching some commodities out there. Solar perked back up. It's kind of been flagging in here pretty nicely. It was an infrastructure play. I thought they were going to take profits on this once the infrastructure bill passed. It's holding actually pretty nicely. So if this gets back above 100, I think we get another little move here. So you could play whatever solar company within there you may want. I think SW or SMP, I don't even remember. Sunpower did look relatively good. I thought if it can get back up, it might look good. First Solar had a bit of a spike. I'm not super convinced on that. Jinko Solar is actually looking relatively strong considering it's a China play, but it looks okay. So depending on run, looks okay. It bounced off the 200-day. They have some levels they need to get through in general. ENPH is the one I was thinking of. That's the strong one. That one looking relatively good. So we'll see if the sector can wake up. It's one I'm keeping an eye on. Obviously, Lithium's been strong as a stock I think we've talked about since August when the Afghanistan withdrawal happened. We started watching that for the wrong reason, actually. I had the wrong thesis on that, but it turned into being a strong sector. And obviously, there's a very big EV component here. It's a very important mineral for the batteries and for stuff like that. So as the infrastructure builds, I mean, they're as EV batteries and the infrastructure EV push goes, lithium is going to be a hot commodity. So it's still looking strong. Nice play on Friday. I'm still watching uranium as well. I don't like how weak it was on Friday. It's still above the 50-day, and it has these nice moments, but I think uranium's very bullish long term. As more of these countries are doing their push towards uranium. We had France, UK, Netherlands, China, all these countries over the last month said that they're making some big pushes into constructing more of the power, the uranium nuclear power generators. Those are long-term build construction things, but I do still like it when it gets in play. I'm going to watch Asana. We're wedging up here, 140, nice little level that we could break from. I know people are like, man, why are you buying these strong stocks? Because this is the market we're in. If you weren't paying attention, this is the market we're in. And Asana hasn't broken out lately. Unity just had its moment. Hell, even Net woke back up a little bit. One stock that hasn't woken back up yet is Asana. Datadog hasn't either. So those could be two that maybe get some rotation if people are just looking to push another software company. We'll see if that happens. Some other retail stocks that look decent. I might watch Macy's. Had a drop after their earnings. Same with Kohl's, but Kohl's was a little bit of a hard drop. I'll watch to see if they base in here and flag. It might take a couple days. I want Walmart long term. I've said this before, but I don't like how this has performed, and I almost am being a bit of a hypocrite here, dip buying a stock that's technically red for the calendar year. But I feel like they're set up to win out on both the inflation play and on the supply chain issue play. But the issue is that the rest of retail have been reporting good earnings, I suppose, so maybe they're not as poised to win out as people might think. I still like it. They had relatively good earnings. They bounced off the 200-day. We'll see if the buyers step in. Bed Bath & Beyond, while it may be a meme play at times, is kind of trending higher right now, reapproaching this 200-day. Volume is going to be its biggest combatant right now, or rather the lack thereof. But, maybe set an alert near 25 just in case this thing wakes up. That's what I'll be doing, keeping an eye there. I know Mike is looking to potentially bounce some of the airlines, so that is something you could look for this week maybe, especially if you think they're going to rotate into the weak value plays on the 3 days of trading we have. Delta, bounced off a technical level. Southwest did a little look below, and now it might be going. So they're approaching, if they were to bounce, if you're looking for a short-term bounce, a level that might be worth considering. We'll see. You just going to have to keep an eye on that and be very careful. Obviously, if you want some weak stocks, PayPal continues to roll back over. Same with, I was actually, I liked how Pinterest was looking. They rolled it back over. And so these stocks are not in favor. Snapchat moving back through lows. Twitter rolling back through. So these other than Facebook, which does kind of concern me about Facebook, but these other ones not looking good. And so I might watch Pinterest and Snapchat, see if they continue to roll back over like we saw Twitter do. So I'll be keeping an eye on those as well. Other than that, some of the other earnings I might watch that aren't retail. Monday after the close, you do have Zoom reporting. Might be good for an intraday trading. Obviously, I wouldn't take a position into that. I wouldn't do anything in expectation of that. But on earnings days, they can be good at times. I wouldn't recommend anyone dip buy it. ARWR, Arrowhead, this is a stock that really can move sometimes. And we're kind of sitting at the 200-day. That's Monday after the close as well, as is Urban Outfitters Tuesday. We talked about a couple of those. I still like American Eagle. They bought that logistics company. They seem pretty poised to help get through a lot of this stuff. The thing is that a lot of retail has reported good earnings, but this is one that's been a little undervalued. So we'll see if they wake up. I know Mo and a couple people have been watching Nordstrom. We'll see how their earnings are Tuesday after the close. Other ones that report, like I said, XPEV is Tuesday morning. See if that wakes them up. CNF is Tuesday morning. Some people like trading the stock. I don't. It's been in play in the past. I don't think this one comes into play this year. Personally, it's been a long time. And then you got the Dix, Cracker Barrel, Jack in the Box, so on. Tuesday after the close. Other ones, Dada, which is I believe a China play that some people might be looking to bounce. I don't know who's trying to bounce China right now. Honestly, it's just not looking good. But I think this is an EV play. Honestly, so maybe they wake up. I'm not positive on that one. DELL, which I like. I like DELL, but I didn't like that or that Friday action. Sadly, Autodesk, which I know some people have traded pretty well before. That's kind of started to ascend back up to the highs. We'll see if that one wakes up. Hewlett Packard reports on Tuesday after the close as well. They just did a gap fill, so this could spur it to continue or not. VMware, which has had moments of good trading. I remember trading it in the summer on here and talking about it on some of the consolidations. And then finally, last but not least, Tuesday, you've got a few. Cheetah Mobile, which is a meme play. They ran that one back when AMC and them were running. The issue is that those meme plays aren't really picking back up. Some of them are. You look like Bed Bath & Beyond stuff, but they're unlikely to. Deere reports. I'm very curious about that because they just got through their worker strike. It was the first worker strike they had in like 30 years, and I'm curious to see what their guidance looks like. I didn't look at how much they gave back. Looks like the market doesn't like how much they gave back for that, but now that they're picking back up their production, I'll see if that affects their guidance at all, or if that worker strike affected their guidance anyway. Regardless, it's an infrastructure play, an industrial play that just isn't participating because of those issues. CN, which I'm not going to play, and then finally FUTU, which is a little kind of compressed down here. We'll see if we get anything. So not the sexiest week of earnings, but that's where we are. That's the market. It's going to be maybe a good 2, hopefully good 3 days of trading. Thursday's closed. Friday, I'm not even going to look at it probably, but it should be fun. So we'll see what we get. But that is it for me.